Good morning and welcome to this weekly market update from MRC Markets. Today is the 8th of May 2012. The charts I'll be going through today are Euro dollar, cable, Aussie dollar, gold and silver charts, giving some sort of weekly outlook in terms of technical analysis. Won't be making any trade calls or recommendations. For any new followers, we have 3 moving averages on each of the charts here. The red one is 55 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's not waste any time, let's go straight to Euro dollar. So on this Euro dollar chart, this is the weekly chart. What we've been talking about for the last sort of few weeks is this recent fib setup, so from the recent low there to the high. In fact, I'll draw it on the daily, so it's much easier to draw. Yeah, so the low is 1 spot 26.23 and the high is 1 spot 34.85. It's been playing out very nicely, very technical. The 50% level has been just the line in the sand for euro dollar in my opinion, at that 1 spot 30.54 level. You can see 1, 2, 3, 4, 5, 6, 7 weeks we had this level where the candlesticks pierced below, but the body's closed above this level. So it's been a very nice level indeed. Last week's candle was quite bearish really, in fact it's bearish engulfing. We said, I mean, the odds is, in our opinion, was kind of still to the upside, although we do have this trendline resistance which I'll actually draw in a minute. But in terms of this weekly, we had a gap down, so the Greek elections and the French elections on the weekend, which caused a lot of volatility in the markets. We had a 70 pip gap down in euro dollar. You can see that much clearer if you flip it to the 1 hour chart. If you look to the left of your chart here, we have this big gap here, which you can see. The significance of that in terms of this weekly chart has meant that this candle, this current weekly candle, has opened below this 50% Fibonacci retracement level. And as you can see already, if I zoom in, you can see that we're pretty much already, just this week, it's just been ranging in between this 50% and 61.8% level. It's 100 pip sort of range. If we're going to get any more momentum to the upside, then we need to get a daily candlestick close above this 50% level. If we get any more momentum to the downside, then I personally believe that we need a daily candle close below. It's Tuesday today, because we had a bank holiday yesterday. As you can see, yesterday's daily candles, a nice sort of hammer really. You can see that we came down and tested to the pip this 61.8% level, and we also came up and tested this 50% level. So it now seems that this 50% level is now, instead of being a support line, it's now acting, previous support is now acting as new resistance. You can already see today we've come up, tested this level, and it's come back down. But you have to remember that this gap still hasn't been filled fully. So in my opinion, the odds are still towards the upside for the rest of the week until that gap fills. But in order we need to get that gap filled, we need to come up and we need to get some sort of daily candlestick close. Another key thing to look out for on this daily chart is this trendline resistance here. It's been holding very nicely. It's been holding since the 29th of Feb. So nice trend line there to keep in mind. If we do get any bounce to the upside, then that'll be a key level to have in the charts. In terms of moving averages on the daily, we have this 100 SMA, which is at around 1 spot 31.18. And the 55 SMA is at 1 spot 32.04. But no, in terms of if we're going to get any more momentum to the outside, then we need to get, in my opinion, I think we need to get a candlestick close above this 50% level. Okay, let's have a look at cable. Let's have a little quick look at the weekly. We've spoken about it a million times before. This trendline support has been holding very well. It's been acting as we have a kind of nice little wedge here at around, I think it's 167.50 level. It's very technical on cable. You still have to say the odds are towards the upside, but maybe not for this week. But in terms of weekly chart, the odds are towards the upside in my opinion, but it's kind of in between this level now. Last week's candle quite bearish, not an engulfing, so Wouldn't expect the markets to completely tank this week on cable, but not a massive amount of interest there, in my opinion. I mean, in terms of weekly, all really care about these two trend lines. If we get any retracement this week, then I'll be looking out for the 55 weekly moving average, see what happens at around that area. But the daily chart is much more interesting, and here is why. You can see on this daily chart we have a nice trend line support which has been holding very well. You can either move it in or you can use it there. So yeah, I mean, the odds, the best thing to do, really, the best way to play it, a lot of people will be playing it, is buying on the dips. So buying it if we get a nice bounce off the trend line. What you can use to make it easier to pick your level to buy it is to plot a fib retracement there from the recent bounce low off the trend line to the high at 1.6300, and look for some sort of bounce off the 50% or the 61.8. So that's going to be a key level this week. If we do get any further retracement, is what's going to happen at around this 50% level, and what's going to happen around this 61.8 if we don't hold that 50%. It's all about this trend line for me, really, on the daily. If it breaks it, then you have the weekly trend line just below. So key, very technical chart cable, you can't ignore that at all. In terms of, I'm just going to plot a recent fib here. I just want to see what happens. Yeah, because I was thinking about what if the 123 was in play, but it's not, so it's completely ignore that. So yeah, all I'd really look out for this week is that trend line support and what happens if we come down and test it this week. That's the main thing I'll be looking out for. If we do get a break of the trend line, then you've got this 55 SMA which is creeping up here. Currently it stands at 1.5933. Okay, let's have a look at Aussie dollar. In terms of the weekly chart, we have a very nice trend line here which has been holding since around 2009. Currently we are testing this trend line support as we speak, which also coincides with a 100-week moving average here. So very key confluence area there to look out for how it reacts at the end of the week in terms of the weekly candlestick close. But in terms of this week, let's flip it to the daily. The key fib that I'm looking out for is from this bounce low here to the recent highs up here. So the low is 0.9386 and the high is 1.0855. But as you can see, if we just zoom in a bit here, we are currently testing, surprise, the 50% Fibonacci retracement level, which kind of coincides with this trend line. Some people may move this trend line in a bit, but I'm just leaving it. I'm not bringing the trend line at all. You can see it's already starting to bounce off this level at the 1.0121. That's the key line in the sand for me this week. What is going to happen around this level? Because that's a really big fib there, especially if we look at it on the weekly or the daily. It's the main fib on the chart. Another thing too, do we have the gap fill from yesterday? No, not really. Ignore that. I've just seen if there was a gap to fill, but no, there isn't. So yeah, the main line in the sand this week, the main level you want to look out for is a 1.0121. How it's going to react. The daily candle is already looking a little bit heavy. If you flip it to a 15-minute, you can see it's come down, pretty much nearly tested it and bounced up. It's already started to bounce as we speak off this level. So that's a key level to look out for on your charts this week for Aussie. Okay, it's done for the forex. Let's have a little look at gold. In terms of gold, what do we have? You have to have this trend line support on your charts here. Been holding since 2008. It's the key trend line on the weekly. In terms of moving averages, nothing really of interest. So let's flip it to the daily. The fib that everyone's looking at, and me included, is from the low there to the high there. And as you can see, the main area of interest on gold is this 61.8% level at 1624.91. You can see we've already had a few tests of it here. One spike candle there, one there, and as you can see today already, we've already had it come down, test this level, and we've started to bounce up. But in terms of momentum to the upside, if we're going to get any longer term investors or any sort of buyers at all on gold, then they're most probably going to be coming in at this 16.24 level. You can already see the price action has been very, very technical at around the 61.8% retracement. In terms of moving averages, if we do get a nice bounce to the upside today or tomorrow, then the key resistance will first of all be that 50% level that may hold. That could be a previous support and then act as resistance. But in terms of the moving averages, we have this 100. I'm just going to highlight it for you. The 100 SMA has been holding very well. We had it once hold there, tested and couldn't break above. We had it another time there, twice tested it, came down, and the third time here came up and tested it. So all about this week. In terms of weekly outlook, the 61.8% level, if we get a bounce up, then it's going to be that 100 SMA. What happens at that level? Okay, let's have a little look at silver. Probably very, very similar. In terms of the weekly, let's just have a look at this recent fib. Actually, no, let's have a look at the trend line. So we have a nice trend line resistance here on silver. If we bring it in a bit there, that's holding very, very well. In terms of any trend line support, that's the trend line support you want to have, so it's still in between this nice triangular sort of formation, and it looks like it just wants to come down and test this support. In terms of the fib, let's flip it to the daily. So I've got the wrong moving averages up, and I've just realised. In terms of the moving averages, we are now below the 100 week moving average here, so that's a key point on there. In terms of the fib setups, it's looking heavy, silver, in my opinion, much heavier than gold, and it's not really reacting too well. It was reacting quite well to the 61.8 around here. I'll just highlight that for you. You can see around there it was a nice sort of reaction around the 61.8, but now we're below this, so it looks like it wants to come down and maybe test this 78.6. But in terms of silver, I'd really just be keeping an eye out on this trend line support. What's going to happen at this level here? I mean, let's flip it to the daily actually. Let's make it a bit cleaner. If you draw the trend line from to the body, the lows of the bodies there, then that's where I'd have it. If you wanted to bring it down a little bit lower, then it may coincide. We may get may coincide with the 78.6 around here, but I'd personally just be bringing that above and put the trend line just at the lows of the bodies there. So yeah, it's all about what happens at this trend line support really for me in terms of silver. I mean, if you want to sell into the rallies, then you can have your trend line resistance from up around there and just keep on selling into the rallies. But I'd expect some sort of dip buys to come in, especially if gold is going to get a bounce off that 61.8. I would expect silver to follow, so I'd always be cautious on selling silver because it's very, very cheap at the minute as well. I mean, we're now below the $30 mark. I shall highlight that. That's another level that I'd definitely stick on my charts, is this $30 level. You can see how it's been reacting well there. We had 3 daily candlesticks there, when in fact 4 pierced it and came above, so that's a great line to have in the charts, is that $30 per ounce level. If we get a close above that today, then that will be very, very bullish indeed, I would assume. So yeah, quite an interesting chart. Not as interesting as gold though, in my opinion. Okay, let's have a look at quickly have a look at the Forex calendar for this week. So in terms of today, what have we already had out? We've already had the German industrial production numbers month on month, a big beat on the forecast there. The forecast was 0.8%, it came out at 2.8%. Not a lot of high impact news, nothing out on Wednesday. Thursday we have some Australian data, we have the employment change numbers, we have the unemployment rate expected to increase at 5.3% there. At 9:30 UK time on Thursday we have the UK manufacturing production numbers month on month, forecast at 0.4%, previously was -1.0%. We have the asset purchase facility, we have the official bank rate and the MPC rate statement. That's the key bits of data and economic data out on Thursday for the UK. For any of you that trade dollar CAD, with the Canadian trade balance figures out of forecast at 0.8 billion, and we also have the US trade balance data and weekly jobless claims at 1:30. At 2:30 on Thursday, we have Fed Chairman Ben Bernanke. What will he be saying about QE? Will there be any sort of QE hints? That's what everyone's looking out for at the minute from Bernanke. On Friday, what do we have? We have China's CPI. That's a big number for any of you that trade indices, and also has an effect on euro dollar as well. 9:30 UK time, we have PPI input numbers month on month, forecast at minus 0.8%, previously was 1.9%, so we're expecting a decrease in those numbers. And we have Canadian employment change and the unemployment rate out at 1:30. US news, we have PPI month on month, forecasted to stay flat there, as well as the previous, which was 0.0%. And to end the week, we're at 2:55 PM with the preliminary University of Michigan consumer sentiment numbers, forecast at 76.5, previously was 76.4. Okay, that's all for today. Hope you found that webinar very useful. Have a great week trading, and I'll catch you next Monday. Thank you very much.